All right, why don't we get started here? So listen, good afternoon, everyone. It's my pleasure today to introduce Q4 Inc. to the Wellington Altus team. You may or may not know that Q4 is a capital markets communications platform used by public companies, investment banks, and investors to discover, communicate, and engage with one another. With a global customer base of over 2,600 clients in 120 countries, a 93% customer retention rate, over 4,000 virtual events per year, and 24 million unique annual website visits, Q4 has become the capital markets partner of choice. So with us today is Darrell Heaps, founder and CEO of Q4 Inc., and Matt Trachtenberg, SVP Investor Relations, to walk us through the story. So gentlemen, thank you so much for your time.
Our pleasure, Kenrick. Nice to speak with you again. Would it make sense for me to just kick off and walk through the presentation, and then we will go into some Q&A?
Absolutely, absolutely.
All right, fantastic. Well, again, it's nice to see you, Kenrick. Thanks for setting this up, and welcome to everyone on the call today. Thanks for carving out your time to learn a little bit more about Q4. The presentation I have will take us maybe, take me maybe 10, 15 minutes to go through or so, and then happy to take any questions that would be of interest for all of you. So why don't we get started then? So first off, we're going to be making some forward-looking statements here in this presentation, so please read our disclaimers around risk. This is hopefully not the most exciting slide that you'll hear me go through today. You know, one of the kind of our key mission has always been to become the largest capital markets communication platform in the world. And we've really been focused on this mission for the last 5 or 10 years. The way to really kind of think about what it is that we do is Q4 as a business is a capital markets communications platform. And we sit at the intersection between corporates, the sell side, and the buy side. And the workflows that we focus on are really what we talk about as being kind of the fundamental workflows of the market. The opportunity here is when you look at kind of the trading side of the market, you see incredible efficiency, unified systems, unified data, and kind of mind-blowing speed. Whereas when you look at the fundamental side of the market, so that is workflows around investor relations, corporate access, research management, deal management, all of these are incredibly inefficient, where they are mostly made up of siloed applications, disparate data systems. There's no unifying platform, data, or insight across all of these different workflows. And we've really been focused on kind of building out against this vision. And what we started with is the corporate side of this equation. And that's something when I started the business years ago, it was really starting with building out solutions for investor relations, particularly web solutions for investor relations. And we've really been able to build out a full suite of products on the investor relations side over the last number of years. But what we've done since the beginning of 2020 is to start to really expand that out into serving the sell side initially through corporate access. And then what you're going to see is us continue to bring corporate access and kind of investor event solutions to the sell side, moving then into research management, and eventually to also have our products be engaging the buy side from a business perspective. Today, the buy side investors, like many of you, are using our platform every day at scale. Kenrick mentioned a couple of stats that we have, where we have literally millions of investors using our platform across our network of websites each month, or hundreds of thousands of investors joining virtual events that are hosted by us every quarter. But as we go forward, we really look at generating revenue from the buy side a couple years down the line. So this kind of focus on capital markets platform is something that we are absolutely laser focused on, and really excited to take you through. The key macro trends that drive demand for our business is at the base level, not listed here. I'll go over these in just a second, but the key thing is the interactions between companies and investors. And, you know, when I started Q4, one of the kind of founding principles of the business was that no matter what the market conditions were, companies will always be looking to attract new investors, and investors will always be looking for either investing further in the companies that they're already invested in, or looking for new opportunities out in the market. And that kind of relationship between companies and investors that demand is incredibly durable. We saw that demand happen through the first financial crisis in 2008, which was our first kind of test of this demand, where we were a small business at that point, where we had maybe 100 clients or so. But the amazing thing we learned during 2008 was that we didn't lose any clients during that period. And that really gave us the confidence that we had a platform business here, that we could build out an entire suite of products to serve not only the corporate, but then eventually the sell side and the buy side. But more recently, when we think about the kind of more near-term macro trends, they really show up in these four main buckets here. The first being the virtual workforce. And I think what we've seen since the beginning of COVID in 2020 is not only a huge adoption of virtual tools in terms of how we meet, but it's really been this kind of digitization of all workflows. That when everything goes to virtual, it's not only about meetings like what we're going through today, but all systems also move to the cloud. And that kind of mass transformation to digital systems and virtual has certainly been one of the key aspects that's driven demand for our types of solutions in the capital markets. The other is the Great Resignation, is that one of the key things that we do, the underlying kind of data layer that we have across all of our products, is a sizable contact database where we track about 350,000 contacts in the capital markets. That database is becoming incredibly valuable because there is a huge amount of movement across Wall Street. So whether that's on the buy side or the sell side, we're seeing just massive change happen across the market. And our identity strategy and the value that we bring from an identity perspective and tracking identities is incredibly valuable when you have this type of movement, this amount of movement happening in the market. The next is really around the changing market economics. This is really about the amount of revenue that can be generated by the sell side from trading commissions. This has been historically the #1 economic driver of sell side activity. And the fact is that there's been fee compression that started on trading revenues, but also has been accelerated by the disruption of MiFID and this kind of decoupling of soft dollar commissions to pay for things like corporate access and research. The impact on this has been on the corporate side is that the service levels that the banks used to provide public companies simply isn't there anymore. So in the past, maybe 10 years ago, if you were a public company, you're in investor relations, you could really rely on the bank to be able to do a huge amount of work for you. You want to set up a roadshow in New York? No problem. They'll handle it and fill the calendar. That world is gone now. You know, in the past, these IR teams, you could kind of sit and wait for the phone to ring from banks bringing investors forward. That was really an inbound role. That world doesn't exist today, where companies really have to be much more proactive in their outreach. That although the bank is an important partner, you simply can't rely on it to the fullest degree like you used to be able to. So that drives demands for what we do, because our suite of products helps corporates really take control and be proactive in how they market, how they engage, and how they communicate with investors on the street. Similarly, these changing market dynamics have also impacted how the buy side and the sell side work. You see many asset managers creating their own research departments, their own corporate access departments, as they also look to take more control over all of their interactions in the market. Now, again, this isn't meaning that the sell side is being disintermediated and left behind, not at all. It's just changing the relationship between those three sides of the market. And the final one here is about data-driven decision-making. Is that in a world where you have to become more proactive and take more control, and also everything has gone digital, the amount of data available helps companies and investors simply make better decisions in terms of who they're targeting, who they're spending time with, and how they're really driving the results that are most impactful for their business. And that's something that we've been really focused on. One of the key aspects that, one of the benefits of what we do is that there's a huge amount of data exhaust that comes out of our platform. And that's in things like when we have over 10 million investors hitting our network of websites, we have a huge amount of insights in terms of the behavior of all of those investors. That is also, if we look at that across their behavior of all the virtual events that we host, gives us a huge amount of insight into their behavior. When we overlay that with what we know about what's happening in the market in terms of how they're actually trading, that gives us huge insights in terms of how behavior leads action, and that helps us provide insights to our corporate clients. And the key thing here, when you look at kind of all of these trends, and in a data-driven world, the reality is that platforms win. And they win because of that simple use case that I just took you through in terms of us understanding how the behavior on one side of our platform helps to drive insights on the other side of the platform. And that's something which is incredibly unique in the market, where our competitors are point solutions, where what we're looking at here on this slide is all of the different product categories that run on top of our platform. Now, these are all unified by a common data lake that runs across all of these products. And also, we're able to take behavior and insights from one end of that platform and one set of products and bring them into another product to deliver additional value. That's something which makes us incredibly competitive against our competitors that are largely these point solutions, that maybe they have a website solution or maybe it's a CRM solution, but they cannot compete to the same degree when we unify everything across the board. And really, what we're doing here is we've built out, initially we started with websites. That was kind of the founding product that we had many years ago. But then over time, we've really begun expanding that, moving into virtual events. These are things such as, let me back up on the websites for a second. The way to understand the website product is if you go to netflix.com and you click on investors, that's going to take you to investors.netflix.com. Everything you see there is running on Q4. Now, it looks and feels like Netflix, but it's actually all Q4. All the interface, the actual website, all the data, the tools, et cetera, all the services you have are all coming from Q4. Now, it's designed to look and feel like Netflix, so you as an investor can't tell that it's Q4, but you are using Q4 at that moment. So we started with that, and then we moved into virtual events, which are things like running earnings calls, investor days, non-deal roadshows, et cetera. Then moving into analytics, this is where we really help companies understand who their shareholders are today and who they should be in the future. And we do that on a company by company basis, but also giving them great insights across all of their peer set to really help companies understand how they're performing relative to their peers and the market, and how to use all that information to drive targeting and outreach to find the right investors. Then the final category there in the corporate side is CRM. And this is similar to like a Salesforce.com CRM used for sales. Our clients use our CRM to manage all their interactions with the street, all of their outreach, all of their meetings, et cetera, are all executed within the CRM. And then there's a whole bunch of reporting and analytics in that to help them communicate all their progress to their management teams and to their board. And then moving into the sell side and buy side products, as I mentioned, these are the newer initiatives that we have over the last couple of years. And specifically within the sell side, what we do is we've taken our virtual events platform and expanded that out to run use cases like investor conferences. So if you attend an investor conference where there's kind of multiple streams and a large number of one-on-ones, there's a good chance that you're going to come across our platform in running these types of events. And that's just the beginning of the kind of work that we're doing with banks as we start to broaden out our corporate access footprint and then begin to move into research management and other types of use cases. All of this strategy has been working really well, and it has allowed us to deliver some really exceptional results. So today, or as of the end of the third quarter, we crossed 2,600 corporate clients. That represents about a 6% market share globally, about a 25% market share within the US. But that's only for one product. The key thing for us, if you think about the slide I just took you through, most of our clients today, about 60% of our clients, use us for one product on that platform. Now, that's because, one, we've been very focused on kind of new logo acquisition, but also we acquired through two deals we did, one with Business Wire and one with S&P. We acquired about 1,000 customers by the beginning of 2020 that were single product customers. So we see huge opportunity to take the business that we've built and to really drive acceleration through those, not only acquiring more customers onto the platform, which we're very good at, and I'll talk to a couple of data points on that, but the other key thing is to drive the upsell and cross-sell into the client base to really drive that overall kind of revenue acceleration, which I'll talk about in a second. Along the bottom here, some amazing names. I think the quality of our client base is something that we're incredibly proud of, and the credibility that brings is something that we think is really important. But also wanted to highlight a couple of the banks that we've been able to do some work with over the last couple of months, so including National, Cowen, and TD Securities. So we're reporting, we haven't reported our fourth quarter results yet. Those are coming soon. And I would love to talk to you about how the quarter went and the progress we're making, et cetera. Obviously, I can't go into that level of detail right now. So what I wanted to highlight are a couple of the key things that came out of the third quarter results. The first one being that we've added over 640 new logos onto the platform in the previous 12 months. This is a huge accomplishment. I mean, the rate of new logo acquisitions is certainly something that we're really proud of. And I think our value proposition and how we're positioned in the market from a platform perspective is one of the key reasons why we're driving that kind of growth. The other aspect is that this land and expand. So today, about 40% of our customers buy more than one product from us. And we're really focused on continuing to connect all of our products on the platform and really, with large degree of intent, drive that expansion of our customers in terms of using us for more and more products on the platform. We know the customers that use more than one product with us, they churn less and they buy more. So that's something that historically we've done kind of in conjunction with our new logo efforts. But moving forward, we have a firm commitment against our expansion selling. So I think you can expect to see some great results there over the next couple of quarters. The other kind of key thing that I wanted to talk about here is just our overall kind of renewal rate. So when we look at our ability to obtain and retain customers, we're really pleased at delivering that at a sub 10% churn. So we're about 6 or 7% churn on an annual basis. That number allows us to continue to really build the business over time, and something that we're quite pleased with. So a couple of kind of final highlights here. So ending the third quarter, we delivered about 13 million in revenue. That was growing at around 30% year over year. We had a great quarter from a gross margin perspective. We're really focused on driving gross margin expansion. So today we ended the quarter at about 57% gross margin. And that's something that what you can expect to see is that number continuing to expand over time. That was about 400 basis points increase from a year ago. And that's something we're really focused on doing on an ongoing basis. So the reason for that as well, if you look at some of our more mature aspects of our business, particularly our web business, that product runs in the kind of very high 70% gross margin. That's the profile that we're bringing the entire business to over the course of 22 and 23. And we're doing that through the aggregation of all of our products on our platform, but also in one specific area around vertically integrating our virtual events business. So historically, over time, we use third parties to deliver a lot of our virtual events. But beginning in the midway through 2020, we started to build out our own virtual events platform, and we're now migrating our entire business onto that platform. And that's going to be a huge contributing factor to driving that margin expansion into that kind of mid-70s level. So keep an eye out for that as we make progress going forward. A couple of other key things we announced in the third quarter that we launched a number of new products to market. These being ESG solutions. We're seeing a ton of demand for ESG. So these solutions help corporate clients communicate and package up all their ESG disclosures more effectively and disclose those to the market. So those have been selling really well. As well as we launched our capital markets platform, or the latest iteration of our capital markets platform, delivering these investor conferences for the banking segment. And then finally, I'm going to touch on just the partnerships. So we signed a 3-year renewal with NYSE. The NYSE partnership enables us, we are a preferred vendor for the New York Stock Exchange in delivering our products to their newest issuers, to their IPO clients, as well as their top 500 or so clients that run on NYSE are able to get preferred pricing on Q4 products. That's a terrific partnership that we're really pleased to sign the extension with. And then as well, we continue to have a really productive relationship with Business Wire and the referral relationship that we have with them, which helps us. We bundle in and sell Business Wire services to our clients. And similarly, they do the same in bringing Q4 products to their clients. Finally, we talked a lot as we've come to market around acquisitions. And acquisitions, M&A is a really important part of our strategy. The way to kind of understand it is that historically, we've delivered about a 50% CAGR on over the last 5 years. And that's been achievable through delivering on a sustained basis, kind of a 30 to 40% organic growth, and then with additional growth coming from acquisitions. That's something which drove our huge revenue growth that we achieved in 2020, which we grew about 80%. And that came from about 30% coming from organic growth and about 50% growth coming from an acquisition. But going forward, we're really looking at acquisitions in two ways. One is to continue to help us drive the top line growth we're looking to achieve, but also accelerating our gross margin expansion and bringing profitability sooner. Really, that enhancing our financial profile through acquisitions is something we see a tremendous amount of potential to do so. But also from the strategic side, when we look at our position in the market and our ability to consolidate on the corporate side, as well as use acquisitions to accelerate our expansion into the sell side and buy side, we see huge opportunity because of how fragmented the market is. As I've mentioned through the presentation today, most of our competitors are point solutions that are not connected to the platform, that don't benefit from unified data or analytics. And we see tremendous opportunity to aggregate and bring these targets onto our platform and benefit not only from the strategic growth that comes from that, but also from the accretive nature in terms of our revenue growth and profitability. So that brings me to the end of the presentation. Hopefully that was helpful. It looks like I was bang on about 15 minutes or so. So Kenrick, hopefully that was everything that you were hoping that we'd be able to get through today, but open to any questions.
That was excellent. Thank you.